So Kevin, let's say you were an advisor running money for people that were, at retirement, just retired, but they got another 20, 30 plus years of life to fund with whatever money they've made in life. What kind of allocation do you think would make sense for that person who's thinking that that wealth has to cover their lifestyle for the next 2-3 decades?
Well, the challenge is just people were used to decades before of distributing 5 to 6% out of their portfolios without taking the principal, without burning principal. That is extremely difficult to do in the fixed income market. It's very, very difficult now, obviously, without taking inordinate risk and duration and quality of credit. So my answer, that because I'm one of those people, that I have to live off what I invest in, and I have chosen to go to a higher rating of high quality stocks that are already generating free cash flow. I mean, there's a difference between investing and investing in quality, because if you want to be speculative, that's one thing. But if you're trying to protect capital, preservation of capital, you've got to look at the balance sheet of the company. You've got to make sure the business model is not disrupted. Look at the airlines, for example. The debt on United Airlines was like something like 8 billion. Now it's 20 plus billion. I don't want to own that. That to me is a high risk situation, regardless of what distributions they're planning on making now or in the future. That's too risky. So I'd rather own stocks. I find them off. Obviously, I'm speaking my own book when I talk about it, but I use OUSA for my primary investing vehicle because it avoids situations like that. It looks at the quality of the balance sheet, looks at the propensity to continue to provide distributions and grow dividends, and looks at a lot of other metrics around quality. And so that's the tool that I prefer in terms of preservation and for actually getting a 6% return that I can distribute each year. That's my number one holding. It's basically the anchor of the portfolio. I also use mid-cap, OEUR, or OUSM, which is mid-cap, OEUR, which is Europe, and OGIG, which is my growth portfolio. But all of them are based on quality of balance sheet metrics and the ability to distribute capital, with the exception of OGIG, which is just sheer growth, but it's got a lot of great companies in it.